War is one of the greatest challenges, but often also the greatest opportunity to create wealth and protect assets. Before we look at how many successful people meet this challenge, we should briefly talk about the moral side. Can you actually think about your investments or your assets with a clear conscience at a time when people are dying? Not only can you actually have to, because with your investments and the protection of your assets, you are more or less directly supporting one side or the other, and spending your money and infrastructure on reconstruction for the time after the conflict. This is wealth-locity. Here you create, protect, and grow your wealth fast. Let's now look at the topic of investing and asset protection in practice. First, we will look at the 4 levels of war, and in the second part of the video, into how you can prepare to profit from all of them. Level 1. The war is far, far away, and your assets are not directly threatened. If the war is taking place on the other side of the world, and you are not invested locally in the countries involved, protecting your assets is less important, and you can concentrate on investments. In addition to the obvious investment in manufacturers of war machinery, weapons, tanks, etc., areas such as healthcare, care of the wounded, and commodities, raw materials such as oil, gas, food in the event of impaired supply chains, are also interesting approaches to profit from uncertainties in markets. Since uncertainties at the start of a war initially send stock markets into a tailspin, one should not follow the panic of the masses and blindly sell everything, but rather have a vision for the time afterward, who could benefit from it, or where things will return to pre-war levels most quickly, and invest accordingly. War is often accompanied by inflation, so it may be advisable to keep your cash reserves as low as possible. In this stage, you have enough time to mentally plan your potential investments during the following stages in different scenarios: duration, winners, damage, international sanctions, etc. Level 2. War is either imminent or has already reached the neighboring country, and escalation is likely. At this point, it becomes clear whether your internationalization strategy is sufficient. In the best-case scenario, assets are already spread across the world. If not, this is the possibly last opportunity to move all mobile resources that are not urgently needed locally to a safe foreign country. War often leads to capital controls or simply panic among the population, so that it can be difficult to get the cash you need. In the best-case scenario, you have already made provisions for this, for example, via a bank safe deposit box. A good internationalization strategy includes, not just in times of war, bank accounts in different countries and currencies, ideally from both warring parties as well as neutral alternatives. This cash reserve should be large enough to enable you to survive in the country for a longer period of time without access to your other assets, and also to be able to use it to pay for any necessary escape to another country. Otherwise, standing at the rental car counter without a working credit card can quickly mean the end of your trip, with fatal consequences in the worst-case scenario. If there is still time after this personal protection, it is a good idea to keep an appropriate portion of the assets liquid in order to be able to invest at the right time when prices on the stock exchange, currencies, raw materials, or other assets collapse. Buy the dip. What constitutes an appropriate portion must be assessed on a very individual basis. The amount should be large enough for an investment to pay off significantly, but also within a framework that you can do without the money in the medium term without any problems if the conflict lasts longer than expected. Whether you hold on to real estate in the crisis zone depends on how you expect the new world order in the country to be after the end of hostilities. If you assume that the regime will be replaced and a redistribution of property will take place, it may be better to liquidate it quickly, even if at a loss, before the new rulers expropriate you completely. If, on the other hand, you have faith that the current system will emerge victorious from the fighting, the liquidity reserve described can even be used to get a few bargains in the country if you buy from people who are betting on the opposite result and have to sell under pressure. How much you turn the price screw here remains a matter of both the desired speed of purchase-sale and your personal moral ideas. Level 3. Tanks roll through your own front yard. Finding the best entry price on the stock exchange is usually not the highest priority here. Depending on how you assess the outcome of the battle and whether you decide to stay where you are or flee to a safe neighboring country, different approaches arise. If you choose to flee, voluntarily or involuntarily, you should mentally prepare yourself for the worst possible accident. That is the loss of all assets in the country. be it in bank accounts, deposits, safe deposit boxes, or even your property, including the gold coins buried in the garden. In the worst-case scenario, you could also lose or change your nationality if your home country ceases to exist. You should also say goodbye, for now, to the idea that customers in the country will pay your bills or loans. If things turn out well and you get some or all of your money back after the conflict ends, you consider yourself lucky. If the worst possible accident occurs, the remaining assets must be enough to maintain your usual lifestyle in a new country until a new infrastructure is created. During the fighting, there will probably be a lack of both the time and the necessary infrastructure to reallocate assets at home. With sufficient planning and luck, however, there is permanent access to asset management abroad, for example, to invest in a foreign portfolio. Level 4, peace or ceasefire and reconstruction. Rebuilding societies is a particularly good way to make money because local society needs capital to repair the damage and restore social order. From a purely capitalist perspective, it doesn't matter which side won the battle. In all cases, destroyed houses have to be rebuilt, roads repaired, telecommunications restored, and many entrepreneurs need capital to restart their business activities, for example, for repairing machines or supplier loans. Private equity can be placed here very well on good terms, or for a little less return but also less work, simply invest in the largest companies traded on the local stock exchange. The trick here is to choose the right time to liquidate previous investments abroad and then reinvest the capital in the home country at higher returns. Such investments are usually long-term, unless the next conflict is just around the corner, ideally over generations. If you are involved in reconstruction from the start and are involved in basic infrastructure, you sometimes even have the opportunity to exert political influence to improve your own investment conditions or to take advantage of tax breaks created especially for reconstruction workers. Now that you know the 4 levels of war, let's have a look at how you can profit from all of them. First, it's important to understand the impact of war on the economy. War can lead to economic instability, affecting markets, currencies, and trade. Inflation may rise, supply chains can be disrupted, and certain industries might suffer while others thrive. Knowing these potential impacts can help you make informed decisions. Diversification is key to protecting your wealth during times of war. By spreading your investments across different asset classes, you can reduce risk and increase stability. Consider investing in stocks, bonds, real estate, and commodities like gold and silver, which often perform well during economic uncertainty. Review your investment portfolio today and consider diversifying into different asset classes to spread risk. Focus on essential industries that tend to remain stable or grow during wartime. Industries such as defense, healthcare, and utilities are often less affected by economic downturns caused by war. Investing in companies within these sectors can provide more stability and potential growth. Defense contractors like Lockheed Martin and Raytheon often see increased demand. Healthcare companies providing essential medical supplies and services remain crucial. Utilities providing electricity, water, and gas are necessary for daily life, ensuring consistent demand. Identify and invest in companies within essential industries to stabilize your portfolio during uncertain times. Investing in precious metals like gold and silver can be a safe haven during times of war. Gold and silver have historically held their value during times of economic turmoil. They can act as a hedge against inflation and currency devaluation. Consider adding precious metals to your investment portfolio to protect your wealth. Consider purchasing precious metals as part of your investment strategy to safeguard against economic instability. Building an emergency fund is crucial during uncertain times. An emergency fund provides a financial safety net, helping you cover unexpected expenses and stay on track with your financial goals. Aim to save at least 3 to 6 months' worth of living expenses. Start building your emergency fund today to ensure you have a financial cushion during uncertain times. Staying informed and adaptable is essential for navigating wartime economies. Keep up with current events and understand how they might impact your investments. Be prepared to adjust your strategy as needed. Flexibility and responsiveness can help you protect and grow your wealth. Stay updated on current events and market trends to make informed investment decisions. Real estate can be a stable investment during times of war. Property values might fluctuate, but real estate often remains a valuable asset. Rental properties can provide steady income, and commercial real estate can offer long-term growth. Diversifying into real estate can enhance your portfolio's stability. Explore real estate investment opportunities to add stability to your investment portfolio. Government bonds can be a low-risk investment option during wartime. Government bonds are typically seen as safe investments because they are backed by the government. They can provide steady returns and help preserve your capital during volatile times. Consider adding government bonds to your portfolio for a low-risk investment option. Exploring international markets can provide additional opportunities for growth. Investing in international markets can help diversify your portfolio and reduce exposure to any single country's economic conditions. Look for stable economies and growth markets outside of conflict zones. Research and consider investing in international markets to diversify and protect your investments. Developing multiple income streams can enhance financial security during war. Having more than one source of income can provide additional financial stability. Consider starting a side business, freelancing, or investing in income-generating assets to diversify your income streams. Explore opportunities to create additional income streams to secure your financial future. Maintaining a long-term perspective is crucial for building wealth during war. While it's important to stay adaptable, don't lose sight of your long-term goals. Continue to invest and plan with the future in mind, knowing that economies typically recover after periods of conflict. Keep your long-term goals in focus and continue investing with a future-oriented mindset. Leverage technology and innovation to stay ahead. Technological advancements can provide new opportunities for investment and business growth. Stay informed about emerging technologies and consider investing in innovative companies that can thrive even in uncertain times. Invest in technology and innovation to capitalize on growth opportunities. Networking and seeking advice from experts can be invaluable. Build a strong network of financial advisors, mentors, and peers who can offer guidance and support. Their insights can help you make informed decisions and stay resilient during challenging times. Expand your network and seek advice from financial experts to enhance your investment strategy. Focusing on health and well-being is essential for long-term success. Maintaining your physical and mental health is crucial, especially during stressful periods. Prioritize self-care, exercise, and healthy eating to stay strong and focused on your financial goals. Prioritize your health and well-being to ensure you can continue working towards your financial goals. Finally, stay positive and resilient. Building wealth during times of war can be challenging, but staying positive and resilient will help you navigate the obstacles. Believe in your ability to adapt and thrive, and keep working towards your goals. Maintain a positive mindset and resilience to overcome challenges and achieve your financial goals. These are the strategies you can use to build wealth in times of war. By staying informed, diversifying your investments, and focusing on long-term goals, you can protect and grow your wealth even during uncertain times. Thank you for watching. If you found this video helpful, please like, comment, and subscribe for more insights on building wealth and achieving financial success. We see you next time with more money in your pocket.